Welcome to the deep dive. Okay, so today we're really digging into something fascinating happening right now in the Bitcoin world.
Hmm,
It's May 2025, and Bitcoin is hovering around $111,000. Pretty staggering.
it really is. And the big theme, the thing everyone's talking about is FOMO, fear of missing out.
Exactly. That's
Yeah.
our focus for this deep dive. We want to break down what's causing this FOMO, how it's playing out, the risks, all of it.
And we're using a great analysis as our guide titled FOMO in Bitcoin, $111,000. Dinamicas, riesgos y estrategias. You get the idea. It's
Yeah.
giving us a framework
Right. Think of it as our roadmap to understanding the drivers, the signs, the dangers.
and maybe even finding some smart ways for you, the listener, to think about navigating this whole situation.
Okay, let's jump in. $111,000 Bitcoin. What's actually fueling this? Our analysis points to a few key areas, starting with the bigger picture stuff, macroeconomics.
Yeah, the macro scene is definitely setting the stage. There's been a lot of chatter, speculation, really, about the U.S. maybe creating a strategic Bitcoin reserve.
Ah, yeah, the Trump comments were mentioned in relation to that.
Exactly. And you could see the market sensitivity. Remember back on March 20th, just the hint of a policy shift
Oh, yeah, Bitcoin jumped like crazy from what, 79,000 to $95,000?
in the single day.
Yeah.
Just shows how much weight these potential government-level moves carry. It kind of changes the risk perception,
Mhm.
potentially.
Wild. And it's not just talk in the US, is it? We're seeing actual moves or potential moves from institutions and even countries.
Precisely. The analysis highlights the Czech National Bank. They're considering putting 5% of their reserves into Bitcoin.
Wow, 5%. That's what, over $7 billion?
$7.3 billion. Yeah. It's a serious chunk of change. And it speaks volumes about Bitcoin being seen as, well, a more legitimate asset by bigger players.
Right. It contributes to that overall market cap pushing past $2 trillion, a 30% jump.
Definitely. It signals broader acceptance. Maybe they see it as a hedge or diversification. Hard to know their exact thinking, but if others follow.
Yeah, that could really change the game long term. So nations potentially getting involved. Plus, the analysis mentions something about global economic stability, like trade deals.
That's right. Those U.S.-UK trade agreements in May helped calm some nerves about, potential trade wars.
Okay.
And a generally calmer global economy tends to be better for risk assets, like Bitcoin. Investors feel a bit more comfortable branching out when the traditional market seems steadier.
Makes sense. Less choppy waters globally might make people more adventurous. Okay, so that's the macro backdrop. But FOMO, that's an emotion, right? What's the market's mood ring saying?
Good question. The analysis looks at the crypto fear and greed index. Right now, it's sitting firmly in the greed zone,
Greed zone. What numbers are we talking?
between 75 and 85. So lots of optimism, lots of enthusiasm, but
But
it's not extreme greed yet. That's over 90. So maybe there's still some level of caution, or maybe the absolute peak euphoria isn't quite here, based on this one indicator anyway.
interesting nuance. It's greedy, but not off the charts greedy. Are there other things maybe suggesting, I don't know, a different feel underneath?
Well, it's tricky. You could look at trading volumes. Are they at absolute record highs everywhere? Maybe not consistently. Or the ratio of long versus short positions in leverage trading.
Yeah.
Sometimes extremes are a warning. But our source doesn't really dive deep into those specifics for this moment.
Gotcha. So greed is the label, but maybe with an asterisk. And of course, social media. That always throws gasoline on the fire, doesn't it?
Oh, absolutely. It's a huge amplifier. The analysis mentions viral posts on X, like at CryptoPro celebrating 100K back on May 8th, talking about alt season.
Right, right.
That stuff just ramps up the excitement for retail investors, and it creates this shared feeling like everyone's getting rich, I need to get in.
Yeah, you can almost feel the pressure building with every scroll. It's that fear of being the one left watching from the sidelines. Okay, so we've got the macro factors, the greedy sentiment, the social media hype. Is there hard data, like on the blockchain itself, showing this FOMO wave?
Yes, definitely. On-chain indicators are pretty clear here. The analysis points to a record number of new Bitcoin addresses created on May 9th.
A record? How many?
344,620 new addresses in a single day.
Wow.
That's a huge influx of new participants. It strongly suggests people are jumping in, likely driven by, well, FOMO. They see the price rising and want a piece of the action.
Okay, but does that mean big money flowing in or just lots of smaller accounts trying their luck? That's a key difference, right?
That's a really important question. The analysis highlights the number of addresses, but not necessarily the average size or value held in them.
Right.
So while the sheer quantity is significant and correlates with the price surge, suggesting speculative interest, we can't say for sure if it's deep-pocketed long-term investors or a rush of smaller, maybe more jittery buyers.
Okay. But still, that number, 344,000, it paints a picture of widespread interest kicking in.
It certainly does. And interestingly, the analysis notes that this increase in active addresses has actually helped absorb some selling pressure coming from medium-term holders.
So new buyers are soaking up coins being sold by people who bought maybe 6 months or a year ago?
Seems like it, which contributes to maybe a higher perceived price floor, making the rally feel more sustainable to some.
Okay, so the pieces are fitting together. Macro tailwinds, greedy sentiment, social media buzz, and now actual on-chain data showing new people flooding in. Let's talk about how this FOMO looks in practice. What specific behaviors are we seeing?
Well, the most obvious one is people buying impulsively near these highs, around $111,000.
Just jumping in without much thought.
Pretty much. The analysis points out buying without proper risk assessment, maybe without really understanding the fundamentals of Bitcoin itself. The main driver is just anxiety. I got to get in before it goes even higher.
Classic FOMO,
Yeah.
buy high, hope it goes higher. And the social media we talked about just keeps pushing that button.
Constantly. Sensational headlines like Bitcoin to $150,000 in 2025. That's an example cited. Plus, all the bullish posts on X, it creates this intense urgency.
Like a countdown clock is ticking.
Exactly. Makes you feel like you're missing the boat right now.
And it's not just the average person feeling this, right? Even professional traders are showing signs.
Yeah, the analysis mentions the derivatives market,
Yeah.
specifically options traders. There were apparently significant bets being placed way back, expecting Bitcoin to hit $111,000 by the end of February 2025.
Wait, end of February, and here we are in May, already past that.
Right, so even the pros, or at least some of them, underestimated the speed of this thing. And seeing those kinds of bets reinforces the expectation that prices could keep climbing.
So even the supposedly sophisticated money is leaning bullish. And this kind of rapid rise, this widespread buying, it often creates a feedback loop, doesn't it?
Precisely. Initial FOMO brings buyers, pushes price up, which makes more people feel FOMO. They buy, price goes higher.
The domino effect.
Exactly. But that loop makes the whole structure pretty fragile. The risk of a sharp correction gets much, much higher when the enthusiasm eventually cools off.
Which brings us neatly to the risks. Because it's not all sunshine and Lambos. What are the big dangers here?
The number one risk is a major market correction. The analysis gives a concrete example. December 2024.
Yeah, what happened then?
Bitcoin dropped pretty sharply from around $101,430 down to $94,200. This was after a big flush out, massive liquidations in the futures market.
Ouch, that's like a 7% drop. Quick.
Yeah, and it's typical of these overheated FOMO-driven run-ups. Things can turn south fast.
And that's the market overall. What about individual people getting hurt?
Absolutely. The analysis shares a cautionary tale, a trader apparently losing $60,000 back in January 2025.
Ow.
By impulsively buying some AI-related token, MPLX it was called, right at its peak, driven purely by hype, by FOMO.
Oh, man. That's a painful lesson. $60 is serious money.
It really underscores the danger of emotional decisions. Chasing hype without doing your homework, it can have very real, very negative consequences.
And regulators, they see this stuff happening, right? They're not ignoring this cryptomania.
No, definitely not. The SEC, for example, has put out warnings about this kind of thing. They basically tell investors, hey, don't get caught up in FOMO, focus on long-term strategies, understand what you're buying.
Standard advice, but probably good advice in times like these. Okay, so we have the hype, the drivers, the FOMO behaviors, and the pretty significant risks. Is there any way to sort of navigate this intelligently? Are there potential opportunities amidst the madness?
Well, while you absolutely need caution, the analysis does touch on potential upside. Some analysts, like those at Bitcoin News mentioned in the source, are looking at technical patterns.
Like chart stuff.
Yeah. They mentioned a bullish pennant. Basically, if Bitcoin stays above $110,000, this pattern could suggest a move towards $145,000.
145K.
And there are even broader projections floating around, maybe $150,000 by mid-2025, if this institutional and retail FOMO keeps up.
So the potential for more gains is on the table, according to some. But how does someone engage with that possibility without just becoming another FOMO statistic?
That's the key question. One strategy highlighted is seeing corrections not as a disaster, but as potential entry points.
Buying the dip, basically.
Kind of, but with discipline. The analysis points back to that December 2024 correction. For investors with a plan and a long-term view, that drop was actually a buying opportunity.
Right. Instead of panicking, they saw it as a discount.
Exactly. It requires having a strategy before the dip happens, not reacting emotionally in the moment.
That makes sense, having a plan. So let's talk strategy. What kind of goals or objectives should investors consider right now? Short term first.
Okay, short term, the big one is resist buying at the peak FOMO moments. Wait for pullbacks.
Like you said, look for dips to potential support levels. Maybe that 95K to $100K range mentioned.
Exactly. Try to enter when things cool off a bit, not when they're boiling over. Also, keep a close eye on those on-chain indicators we talked about.
Active addresses, whale movements, that stuff.
Yeah. Are active addresses still growing strongly? Are whales accumulating or starting to send big chunks to exchanges? Those can be clues about whether the FOMO is peaking or if a correction might be coming.
Look for extremes, basically.
Right. Extremes can signal unsustainable conditions. And the analysis also suggests diversifying risk by staggering your buys. Don't go all in at one price point.
Spread it out. Makes sense. Okay, that's short-term thinking. What about the longer view? Months, years down the line?
Long-term, the classic advice still holds. Dollar cost averaging, or DCA.
We're just buying a fixed amount regularly, regardless of price.
Exactly. It averages out your cost basis, smooths out the bumps from volatility, especially useful in a market like Bitcoin's. Also, continuous education is key.
Meaning?
Really understanding Bitcoin's fundamentals, the halving cycle, adoption trends, how the tech works, that helps you make rational decisions, not just react to headlines.
So you're less likely to panic sell or FOMO buy if you actually understand the underlying asset.
Precisely. And finally, prepare for cycles. Expect these FOMO peaks. Expect the corrections that follow. Plan for maybe taking some profit in your highs and having dry powder to buy potential dips. It's about managing the cycle.
Right, acknowledging that it goes up and down. Okay, any specific actionable things people should aim to do? Concrete objectives.
The analysis lists a few. 1, create a written investment plan. Decide what percentage of your portfolio goes to Bitcoin, maybe 5%, maybe 10%, whatever fits your risk tolerance, and stick to it.
Don't let a price surge tempt you to wildly overallocate.
Right. 2, consider using stop-loss orders. They can automatically sell if the price drops sharply, limiting your potential losses. It's a risk management tool.
Takes the emotion out of selling in a panic.
Exactly. And 3, stay informed, but be critical. Use reliable news sources, specialist websites, reputable analysts on X, but filter out the extreme hype, the baseless predictions. Be discerning.
Good advice. Okay, so let's try and wrap this up. The picture seems clear. Bitcoin at 111K is riding a wave fueled by both real macroeconomic shifts and a powerful dose of FOMO. We see that FOMO in the record new addresses, the social media frenzy.
Yep, and while that enthusiasm has pushed the market cap up significantly, it absolutely comes with major risks, corrections, individual losses. These are real possibilities.
So the takeaway really emphasizes rational strategies, doesn't it? Things like DCA, watching the on-chain data, having a plan. That's how you navigate this without getting swept away by the FOMO tide.
That's the core message from the analysis, yes. Discipline over emotion, strategy over impulse.
All right, so here's a final thought for you to mull over. We're hearing potential targets like $145,000, maybe even $150,000. At the same time, we know FOMO markets can be incredibly unstable. Looking beyond this immediate excitement, what fundamental changes maybe in global economics, maybe in technology, do you think will ultimately shape Bitcoin's long-term path? What really matters once the current wave of FOMO subsides? Something to really think about. Thanks for diving depth with us today.